You might have learned ICT concepts, but how do you actually use them to catch trades that actually matter? We want to be able to maximize the risk to reward that we're making on a trade, and to do this, we need to understand the higher time frame, which most beginner traders do not know how to do. What is up, guys? My name is Arbas. Everybody new, welcome to my channel. I am a funded trader who has made over $200,000 in verified prop firm payouts, and I'm here to explain to you guys complex topics and change the way you trade for the better forever. ICT gurus widely overcomplicate and don't actually show you the right way to execute trades that give you high risk to reward. But in this video, I'm exactly going to show you how to do that. No bullshit. You guys might know this as swing trading, but there's a secret to catching swing trades with high risk to reward. So without further ado, let's get into the video. So what is the secret to catching high probability moves trading ICT? The secret lies in the higher time frame, guys. Okay. So as you can see in this picture, I have a quick little rudimentary marked out diagram that I want to show you of how this is essentially going to be working. But essentially is you want to wait for a higher time frame PD array slash point of interest to be hit. The market first has to come into that area. So this could be an order block. It could be a supply demand level. It could be some type of just higher time frame PD array slash POI, right? As the name implies. Okay. Now, before I actually get into this, let's take a step back. Let's cover exactly what the types of trading are. So I feel like, with my content, I really want to give you guys a beginner perspective into, all the terminologies, all the definitions, etc. So you guys really understand what's going on, from that aspect, right? Okay, so let's start off with the types of trading. So number one is going to be scalping. So when you are scalping, guys, you are essentially going for one-to-one RR trades or less than one-to-one RR trades. Essentially, these types of trades are going to be taking advantage of very small, quick moves that happen in the market. Okay, so for example, this would have been an example of a scalp. Let's say you just bought there randomly, super tight stop, you go for a one-to-one. That's an example of a scalp. Okay, now you can also have variations of scalps that are less than one-to-one. Okay, so like anything less than one-to-one, it could be 0.5 RR, 0.3 RR, 0, whatever. That's just a variation of a scalp, okay? And there can be variation in terms of, yes, you can go for one-to-ones on the higher time frame as well, but usually scalping is associated with, quick intraday movements, etc. Not to say you can't scalp on the higher time frame. You can absolutely do that if that's what you want to do. But yeah. Now, the next type of trading is going to be intraday. So with these types of moves, you're really going for less than or equal to 1 to 3 RR trades, in my opinion, and any variation in between. These trades are going to be trades that resolve intraday, okay? And, you can't really hold these trades for too long. And again, yeah, they're just going to be intraday trades. So let's just say, we randomly took a trade like, right here, just really randomly, right? Okay, like right there, okay? You would have gone for a 1, 2, 3 RR trade. So that would have resolved intraday. And any variation below that is going to be also considered intraday. Okay? Now, here's where we're getting to the point of this video and the meat of this, which is swing trading. So swing trading is usually considered going for, 1 to 3 RRs on the higher time frame, okay, or holding positions for, weeks at a time, days at a time. But to get high risk to reward, right? People classify that as swing in my opinion, because it essentially encapsulates the whole idea that you can't expect huge market movements to happen in one singular day. Like, can they happen? Absolutely. But you have to understand, like, markets move in daily ranges and weekly ranges. So in order to get high risk to reward, either your entry has to be perfect with almost, a super tight stop, zero drawdown, not necessarily zero drawdown, but, a super tight stop, right? Or you have to get into a position and then get into the higher time frame trend and just naturally hold for a longer RR or a higher RR based on the higher time frame trend, which will naturally take, a week to play out, 2 weeks to play out, etc., which would then be classified as a swing. Okay, so where does this come in, right? What does this mean for high RR? This means that if you want to get your best, highest probability setup, you need that has high RR. You need to understand the higher time frame narrative, guys. Okay, the higher time frame narrative. The higher time frame narrative will give you insight onto where is the higher time frame order flow. Okay, and essentially, we then go into something called a change of character. So we are looking for a change of character on the higher time frame, which indicates that the market has now shifted order flow on the higher time frame. And after that change of character happens, usually this is going to happen during, late Asian session. That's kind of optimal. But after that change of character happens, then we are then looking for a London session entry, guys. Okay, a London session entry into a New York expansion. And this is going to be your optimal A++ bread and butter scenario. And I have it marked out here. So now going back, right? This is essentially a higher time frame PD array / point of interest, and the market will draw up to this area and it will aggressively move down because institutionally we're currently on a higher time frame bearish order flow mode. Okay, we are respecting weekly structure, and we are expecting the market to continue based on the weekly narrative, right? The 4-hour weekly narrative. And when price does this and it closes below that extreme swing low, okay, that is called a change of character. Once that change of character has happened, that signifies the market is shifting on the lower time frame now to the downside. Okay, excuse me, on the higher time frame, but now also on the lower time frame. Okay, so if you look right here, I have 3 sessions marked out: Asian, London, and New York, because this classic model will happen like this. Okay, it'll essentially dump an Asian session, and then London will be a slight retrace, okay, which you're going to be getting on into a New York expansion, and that New York expansion will give you that high risk reward ratio. And if you're super in line with the order flow, you can just hold this for even more days and get super high risk to reward, guys. Okay, so a couple key factors to notice about this model is that when you have a huge move down in a session like Asian session or whatever, a lot of misconceptions occur because people think you need to have your Asian high be like swept, okay? Like it has to have a liquidity sweep. And I'm here to tell you that's not the case. Highs and lows can be protected and they don't need to be swept once higher time frame order flow is established, okay? And another thing is it does not have to have a deep retrace. Many people think that, oh, we have to retrace all the way up here, maybe you make liquidity sweep the high and then dump, right? That does not have to happen necessarily. But the third biggest thing is you want to be entering on a fractal entry. So this could be over supply and demand right here. This could be on a candle confirmation, etc. Okay, and this is what the model looks like. And essentially, we're able to get in on at one of these points, right? Super tight stop, and just ride that into the New York expansion. Okay, guys. So I'm gonna show you guys the model now. If we go over here, this is the exact model. It happened on November 22nd, which is actually super surprising, right? And as you can see here, we tapped into a higher time frame supply area. Okay, you can also consider this a higher time frame order block right here. Okay, and after we tapped into that higher time frame supply area, and order block, we just started dumping. Okay, so this means that, hey, let's take a step back, okay? And and for me to tell you why this is so important, because if you look at the weekly structure, guys, the weekly structure itself did a change of character as well on the higher time frame, okay? And that fact that it did a change of character on the higher time frame means that we could just be retracing based on the weekly structure now to then even go lower, okay? I hope this makes sense. But essentially, we are playing the fact that we are expecting price to go in line with the order flow now, and we're expecting that retrace on the higher time frame, retrace on the lower time frame based on the higher time frame swing structure, and then it's just all relative. It's all being fractal. Okay, so let's now mark out this Lux Algo Asian session indicator. All right, let's mark this out. Okay. As you see, Asian session dumps. Now, again, price does not have to necessarily retrace all the way back here, okay? Once price is moving so aggressively and it's not even overbought or oversold anymore, you can literally just take a retest of a key supply-demand level, okay? A key supply-demand level, and literally just take that trade all the way down to the next key level based on the higher time frame order flow, which is going to be somewhere around like here or like here. Okay, let's say we want to use this low. Okay, we want to use this low. Okay, that's your algorithmic point because that's the most external low in respect to this whole bullish swing structure. Okay, so what happens is remember, guys, your supply and demand is going to be based on your swing pivot points. So obviously, this is the most extreme pivot point / swing low, and there's also another swing low here, but that's not really relevant, right? It's not really relevant to our point, but to our current narrative. What's relevant though is the POI, the lower time frame area / supply and demand area, that is the most that is in line with this retracement, okay? And that area is only going to be right here, okay? So it's literally so simple, guys. You literally just enter off that area, okay? It's retesting it. And you want to enter in off some type of 3-minute or 5-minute confirmation. You can also wait for some type of lower time frame change of character and just market order. So that lower time frame change of character will happen right here, or it will happen right there. Okay, so if I were to mark this out, this is going to be our internal change of character right here. We have another internal change. Oh, I can't even mark out stuff properly. We have another internal change of character right here, and all you have to do is you just enter market order off that, right, on that candle close, stop loss above the high, right, like that, because we should not go past that high now, because if we want to go past that high, right, we will most likely do something like this and then go higher. But based on this model, we've already tapped into the higher time from POI, so we should continue the bearish order flow, if that makes sense. Okay, so in this case, you can have a really tight stop, and if you miss that one, you wait for another one, and then boom, right? This would actually be a break of structure. Let me actually relabel this. But you would either enter on that candle right there, stop loss above the high, and then all you would do is you would just ride this trade all the way down. All the way down. This is a 6RR trade. 6RR is, in my opinion, high RR, right? And it's just that amazing, right? So obviously somewhere around here above that candle, 6RR. And if you chose this POI, right, you entered off there, you'd have made, what, 7.56 RR. If you had entered off this POI, you would have made, look at this, guys, 7RR. And this is the secret to catching higher time frame moves, basically. You essentially want to get in on, you know, a lower time frame confirmation based on higher time frame established order flow. And now if you somehow, you know, want to use even a lower time frame confirmation, you were that, you know, confident in this trade, you could have even got more RR out of this trade, guys. You could have had a super tight stop like that, got in right there, and then just rid that all the way down. Made, you know, 13 RR, guys, right? It's absolutely insane what you can do when you've had a good understanding of higher time frame order flow and analysis. But I don't want this video to be too long. You know, it's super simple. I hope this made a lot of sense to you, but this is essentially going to be the model. So ingrain this into your brain, and if you see something like this, it's, you know, this is what you should be looking for. And if you have any questions, as usual, you know, drop it below. Join the free Discord, and you know, shoot me a DM if you also have any, you know, dying questions that you need answered immediately. But I hope this video was helpful, guys. And that is the secret to swing trading with ICT and catching high RR trades. All right. I hope you liked the video, guys, and I'll see you in the next one. All right. Take care.